Hello guys and welcome to Forex YouTube. Today we'll be talking about trading psychology. Firstly, you want to be able to understand that trading is something that you have to have a proper mindset. Now the first thing you want to do is set a risk in all trades, and after setting your risk, then you know that once price reaches this particular point, then it's time to go on to the next trade. So my preference as a trader would be a 1 to 20 risk. This means that if you have a $10,000 account, then you'd want to be able to trade at least 20 times before depleting the amount of money that's in your account. So if you have a $10,000 account, then the most you should risk on any trade would be $500. And if you have a $20,000 account, then the most that you should risk on any trade would be $1,000. So let me just explain this by calculation. Let's bring up our calculator. All right. Says that you have a $100 account. Then you divide this by 20. And then you know that the most that you should trade per trade is $5. Because 5 times 20 would be $100. Now, if you had a $10,000 account, then you would divide this by 20. That would be $500. Secondly, if you're looking for a trade which is, say, a head and shoulder pattern. So let's look for a head and shoulder pattern. And you see the left shoulder, the head, and then the right shoulder. If your strategy is for the candlestick to close below the right shoulder, once the candlestick closes below the right shoulder, you should always enter your trade. So you should always trade, take a profit or a loss, and move on to the next trade. Thirdly, trading for 10 trades or even 20 trades doesn't mean that you have a profitable strategy or a losing strategy. Trading for only 20 trades is not sufficient enough to show you that your strategy is consistent. It is over time that you prove whether your strategy is a profitable one or not. Trading is something that is proven by consistently doing the same thing over a long period of time. The fourth point is consider your money lost on a trade as an investment. If you are opening a store, then you have to make an investment where you'd have to pump capital in the business. Now, if it's a clothing store, then you would have to go out and buy stock, which is clothing. So you would have to have the capital or borrow some money and put it into the business. Now, there's an expense to every business, right? So when you buy those clothes, you'd have to pay a certain amount to get the stocks, right? Then when you sell those clothes at a markup, then you would have made a profit on that amount that you paid for the clothes. Each time you buy a new set of shirts or pants, then that's the amount that you have to pay to have the stock. and then you would have to sell that cloth at a markup to make a profit. So it's the same thing in trading. In trading, you will have to consider your losses as the money being spent to gain more money. Number 5, trading should always be objective, not subjective. What does this mean? Objective trading is where you will do something over and over and over in a similar way, in the same way. So if you're going to trade and you're going to trade a double top, so this is the first top, and then this is the second top. If you're going to enter this trade at the break of the candle, then once the candle has broken and closed below the neckline, you would always enter the trade at this point. You will not say, okay, based on what I heard, I will not enter this double top today because based on market reviews, it was said that today no double tops will work. So what you want to do is always be objective. You always want to do the same thing over and over and over. You do not want to be subjective where you're changing your strategy. Now, lastly, the psychology of trading. There is one book that is very important. I think all traders should listen, because it took me 5 years to understand what trading really was and how it really operates. And I almost gave up, but then I found an edge. But even though I had that edge, I still was not mentally ready until I listened to this book. And it's called Trading in the Zone by Mark Douglas. It's a really great book. It's really long, but it's extremely important because trading in the zone allows you and helps you to understand that trading is really 90% mind and then like 10% charts. Trading is really about being conditioned in the mind mentally and psychologically. In the next chapter, I'll be teaching you how retail traders steal money in the market. So until then, take care.